Hello, this is Steve Sanangelo from the SRS Rock Report with a new public YouTube video update called Breaking the Silver Market, Investment Demand to Overwhelm the Market. Now, it's been several months since I published a public YouTube video. I've been focusing on the SRS Rock Report subscribers, but there's been some very interesting information that's been coming out recently. It's kind of a David versus Goliath, the small investor versus the banks. So I wanted to share that information. Also, I believe the fundamentals for the silver market are going to really start to push the price up much higher. And I'm going to explain that. So let's get started. Now, back in late January, as many of you recall, there was the Reddit rebellion. They were going after heavily shorted stocks like GameStop. And then in the Zero Hedge article on January 28th, is the Reddit rebellion about to descend on the precious metal market? And that's the Wall Street bets. And so all of a sudden, we had this tremendous surge of investors moving into the SLV, into even the silver futures and the mining shares. So for a few days, we saw a huge move up in the silver price. And there's been some interesting dynamics that have taken place since then. So I've been putting out some updates again for the SRS Rock Report subscribers. One was breaking news, major disruptions in the silver market. I came out with this in early February, and I showed that during the difference between what was happening during this Wall Street Bets silver squeeze campaign was that in just 3 days, from January 28th to February 2nd, there was a 110 million ounce increase in the global transparent silver holdings. And it shows for January, February, but most of that took place in 3 days. Now, back in July, it was 108 million ounces in the whole month. And that's when silver went up to $30. So something very big changed in the silver market in just a few days. And we could see most of that movement in the inventories in the ETFs was the iShares SLV trust inventory. In July 2020, when the silver price first hit 30, we saw 69 million ounce inflow into the iShares silver ETF. Now compare that with almost double, not quite double, but 110 million ounces that supposedly from January 28th to February 2nd in 3 days moved into the iShares silver ETF. Now, let's disregard if that silver is really there, but to see that kind of an increase suggests something has really changed in the silver market. Now, here we could see JP Morgan is the custodian for the iShares Silver Trust. This is the first page of their JP Morgan Silver List. And here it shows on January 31st, they had 567 million ounces in silver held in 5 vaults. And only one is in New York, 4 are in London. And then 3 days later, actually 4, it took till February 3rd, JP Morgan had amassed another 110 million ounces. And there's 7 vaults now. They got 2 more vaults in London, supposedly. And I think they just kind of borrowed these bars as an accounting measure, because Bullion Star, Roman Manley came out with a very interesting thing that during this huge movement into the SLV and other silver assets, we saw a huge increase in the inventories in the ETFs, especially the SLV ETF. And what he said in his article back in early February was that the LBMA held 28,698 ounces. I'm sorry, tons. It's 922 million ounces, almost a billion ounces of silver held in the LBMA vaults. And he says that it's 85% of all the silver held in London is held in these ETFs and ETCs. Now, what's interesting, after that happened, We see on Zero Hedge, the silver squeeze hits London as SLV warns of limited silver available. And then we see here platinum soars to 6-year highs amid supply shortage. Well, I think we're going to start to see that now with silver. We've seen that with palladium. There's been a deficit of palladium for several years, which has pushed the price of palladium from 500 to over 2,500. I think we're starting to see the same dynamic now played with silver, and there's much more silver investment demand than there's platinum investment demand or palladium investment demand. So when all this silver supposedly moved into the iShares Silver Trust, I think something went off. This Wall Street Bets campaign, the silver short campaign, put a lot of pressure on the wholesale silver market, the 1,000 ounce wholesale bars. So we could see that JP Morgan added all the silver, and they also added 119 million shares when they added this silver. And so what they did is they did an update on their prospectus. And so basically it says the demand for silver may temporarily exceed available supply that is accepted for delivery to a trust, which may adversely affect the investment in the shares. A sudden increase in demand for shares that temporarily exceed supply may result in price volatility of shares. The trading of price of the shares has recently been and could potentially continue to be volatile. So they updated this, and I guess what they're saying is they may not be able to get an available supply of silver. And so then Roman Manley at Bullion Star comes out with a new article on February 16th, and it seems as if Aberdeen's SIVR ETF also updated its prospectus, and it says a possible short squeeze due to a sudden increase in demand of shares that largely exceed supply may lead to price volatility in the shares. So what they're also warning that there could be increased movement into the Aberdeen silver ETF. And if they can't access the silver, then the share of the SIVR ETF goes higher than the net asset value because they can't get the silver to maintain the ratio to the silver price. So I think this is just in the beginning stages. I believe it's going to get even worse. And what we've seen now, what happened after JP Morgan added 110 million ounces, it has declined now about 61 million ounces. It was 677 on February 3rd. It's now 617. So why did it add all that silver and all those shares? And now it's liquidated or removed about 60 million ounces. I think that was to cap the silver price. You going through the ETFs. So what's happened since then? And we could see, I want to show you this first. This is the iShares Silver ETF daily chart. It was actually as of February 22nd. I'll show you an update in a second. So we could see the iShares Silver ETF trading volume is down significantly since the February 1st short squeeze. Look at this on February 1st, 280 million ounces. Now on February 22nd, it had fallen to 54 million. So again, if we look at the Sprott PSLV ETF, they also increased to 46 million shares on February 1st. Now they've gone down, but look at this on the 22nd, they're 31 million. They're not much lower than they were on February 2nd compared to the iShares, which is considerably less, about 80% less. So what seems to be happening is that investors have moved away from the SLV and now they're moving into the Sprott because there's this idea that Sprott is safer. It has the silver to back up. There's a counting of their silver. And there's speculation that JP Morgan may not hold the silver, or if they do, many of those bars are oversubscribed. So now we're seeing a transition of investors now moving into the Sprott PSLV. So if we look at this monthly chart of the iShares Silver ETF, what's interesting, The iShares Silver ETF on February 2021, and this is the whole month, trading volume is lower right here than it was in July last year when the silver price went up to 30. And it's even less than what it was back in 2011 when the silver price went to 50. So if we look at the Sprott, we see a much different situation. Look at the volume here. It reached a high of 262 million shares traded in February 2021, more than double the shares traded in July. Right here, this is the shares traded in July. This is when silver first went up to 30 in the summer last year. And if we go back to 2011, look how much lower the Sprott PSLV. So right here, this is a warning sign that investors are now switching to the Sprott PSLV because they believe that the PSLV is much more credible silver ETF, and it is. Now, what is fascinating, since February 2nd, when JP Morgan increased the iShares Silver ETF inventories 110 million ounces, since February 2nd to the end of February 26th on Friday, this is the net change. The Sprott PSLV has added 23 million ounces of silver, where the iShares has liquidated 61 million ounces. What a big difference. So again, the iShares, it does seem to me that the iShares Silver ETF, the custodian, BlackRock, there's a lot of shares added during the Wall Street Bets silver short campaign in the end of January and February, and that was used to kind of cap the silver price. But now Sprott continues to add silver to the Sprott PSLV ETF. Now, another interesting thing that's happening, and it also shows that there's a lot more investors moving into the Sprott PSLV, is that if we look at the iShares Silver ETF versus the silver price, we just divide the iShares Silver ETF by the silver price. This is the beginning of the Wall Street Bets short squeeze campaign on January 28th. It's moved up a 1.3%. Basically, the silver premium, the iShares Silver ETF to the premium, it's moved up about 1.3%, even though it's been volatile. Now look at the difference with the Sprott. This is the Sprott PSLV versus the silver price. It has moved up much more dramatically. It's 6.3% higher since January 28th. So something has really changed in the silver market, and it seems as if investors now are transitioning and moving more towards the Sprott PSLV. So if we remove the Wall Street Bets short silver campaign, already the silver market, something big was happening. So if we go from 2009 to 2012, during the $50 price spike, this is the monthly transparent silver holdings, most of it on their ETFs. Total silver holdings increased by approximately 300 million ounces over the 3-year period. Now, if you look, the blue line is the silver inventories, and this little gray line is the silver price that shot up all the way to 50. So from 2009 to the end of 2012, the total inventories increased about 300 million, which is about 100 million a year. Now, since 2020, the beginning of 2020, total silver holdings have increased by approximately 500 million over a year. It's a year and 2 months. So it's 5 times the increase in the silver inventories compared to what it was during the $50 price spike. And here's the silver price move here. It's half of what it was in between 2009 to 2011 and 12. So something changed, and basically it changed right after the pandemic because of all the central bank money printing. Investors are starting to wake up that at some point in time, all this Fed and central bank manipulation of the intervention of the market is going to really hurt the currencies, and we're going to see a big problem in the financial markets. So what has that done? Now, this is the London Silver ETF holdings, and it's only as of December 31st, 2020. It hasn't been updated for the quarter. So we could see this is the silver held, the ETFs held in London back between 2011 and 13, when the price moved up considerably. The inventories did not move up that much. But look here, look how much they've moved up. They started to move up in 19, but look how much they moved up in 2020. Now this is before the Wall Street Bets silver short campaign. It's even higher now. And according to Roman Manley, he says it's 28,000 metric tons. And here it's only about 21,000 metric tons. So what is happening is this silver that's held in London, it's being absorbed by the ETFs. And that's putting a tightness now on the market. And so what happened yesterday was, I was reading Zero Hedge, and it looks as if a gentleman named Ivan has started a silver squeeze campaign. And amazingly, in just one day, a little more than 24 hours, he's raised 50,000. I think it's 52,000 now, to do a silver squeeze marketing campaign. I believe he's out of Europe, and he's going to get billboards and advertise. And it would be interesting to see if someone starts to do that in the United States. But again, this is when you see this kind of activity, this is the David against the Goliath. And so we're getting much more activity now with social media, putting the word out about silver to the public. But I say that's great. I'm all for that, but we don't even need that, because I was on Twitter today, and that's the reason why I actually did this YouTube video. I was very busy on Twitter. A lot of people said, if we could just get another Bunker Hunt, if we could just get a billionaire, if we can really push this silver short squeeze campaign, and that would solve it. And I think what that would do would eventually be more like GameStop. We'd see the big, huge increase in GameStop, and then it would collapse. Well, the way I look at the silver market, we're just beginning. All these things that are happening with the social media and the short squeeze, it's kind of like the word of mouth in the restaurant that's a hole in the wall, but has excellent food. Word of mouth makes that place busy. Well, that's what this is doing. But guess what? It's the fundamentals of the silver market that are going to push the silver price, the value of silver, up to levels we just can't even imagine. And that's just going to happen, continue to happen over the next several months and years. It's going to happen. And the reason it's going to happen comes down to this chart: global silver industrial demand versus net physical and ETF investment 2011 to forecast 2020. The gray bars are the industrial demand, and for the first time, in total silver investment demand had surpassed industrial demand. Now, this does not include photography, but it's 585 million ounces. That becomes the squeeze on the market, because when you look at this next chart, this is world silver industrial demand versus physical ETF and investment demand this is a 10-year average. So if we go back 10 years, industrial demand was about 529 million ounces a year. The average for both physical and ETF civil investment is 261 million ounces. Well, look what happened this year, 2020. In last year, 2020. 495 million ounces of industrial demand, including photography, compared to 587 million for ETF and physical investment demand. This is the game changer. And this all happened before the Wall Street Bets silver short squeeze. That just is icing on the cake. And why is that the case? Because, as I mentioned, after the pandemic, the situation was getting bad anyhow, and that's due to the energy. But the pandemic sped the process up. And so now more and more investors, or let's say the public, who have friends and family who have been investing in silver, and they've been badgering them for a decade about getting into silver. They're starting to wake up. So it's just the silver story is just going to continue to get more people interested. There's going to be more demand. And I think we're going to see investment demand again surpass industrial demand this year. And that can't continue to happen because there just isn't the available silver. And why is that? And I had posted this this chart in a video earlier this year, well, last year, annual world silver mine supply versus global net silver investment, physical and ETF. This is global silver mine supply minus investment is right here. And this is the total percentage. We can see that global net silver investment was 8% in 2005. Look at it, got to 42% in 2008 during the financial crisis. look where it hit in 2020. It's 75% of total global mine supply. Now, global mine supply is going to recover in 2021, but we're going to see another year like this kind of silver investment, that is going to really start to put a big tightness on the wholesale silver market. And that's what we haven't had before. Back in 2008, when the price of silver fell to $9, people were buying silver eagles and coins, and they couldn't get them. They were a month, 2-month wait. And so people were buying 1,000 ounce silver bars, wholesale bars, and melting them and making coins. Well, now it's hard to get the silver 1,000 ounce silver bars. A lot of places you can get them, but it takes a while, and there's been a tightness now in the wholesale silver market. So this is the big change. Again, we had the big price of silver moved here, and now we had not that much of an increase, but this is the big change. I believe investors now, after the pandemic, are very concerned about the currencies, about the debt, about the financial system. And I believe this is just going to continue to build until it can't build anymore. And then we're going to see higher silver prices. So while the short-term dynamics of the silver market are going to be very interesting with the GoFundMe on Silver Short campaign and all these different things are happening, the underlying fundamental for silver is and gold are going to continue to get strong, because back in the past, when banks held gold and silver in their vaults, they were massive stores of energy equivalent value. And if you don't understand that term, you should be a subscriber at the SRS Rock Report, because that's all gold and silver are. They are stores of energy equivalent value, because the economy is nothing but energy. If you don't consume or burn energy, there's no economy. The world doesn't run on finance, it runs on energy. Today, the banks store paper currency and digital money that have no energy equivalent value, but are rather energy IOUs. So stocks and bonds and real estate aren't stores of value, but are energy IOUs. Gold and silver are stores of energy equivalent value. And the reason why the central banks and the Fed have been able to kind of control the upward movement of the silver gold price has been due to the increase of energy production to allow growth, that's what the fiat monetary system is based on, oil growth. But now we're starting to get into trouble with oil and energy, all these stocks, bonds, and real estate get into serious trouble, which is why gold and silver are only going to get better over time. And why is this the case? Well, again, if you subscribe to the SRS Rock Report, you're going to learn more about the energy cliff. Unfortunately, most precious metal analysts, even the economists and regular financial analysts, have no idea about energy. They just seem to think that the world is run by the energy tooth fairy, but we're starting to see more and more examples of the coming energy cliff. And this is the real reason why investors should be investing in the precious metals, especially silver. And I put out a couple of very important energy videos, which you should become a subscriber and understand, because we had the Texas electric power failure, prelude to the coming disaster. I showed how the wind power failed, even though natural gas did fail. The massive failure was wind, and then I did an update this week. Clear evidence that wind power failed countrywide during the freeze. And as the US is going to move to 29% wind and solar by 2030, yes, that's good for silver because they're going to use silver in high tech. It's going to be bad for the US grid and Americans, because they're going to have a lot of trouble, just like with Texas. It's going to get even worse. So you need to learn about what's going to happen with energy in the future. And now lastly, the silver market has changed because right here, this is the reason the silver market has changed. It's fundamental. We are seeing so much more silver investment than industrial demand. And silver is going to start acting like palladium, even worse, because there's so much physical silver and ETF demand. And when you realize there's not that much more silver than gold. Now, this is identifiable silver and gold investments, stocks in the world. If we were to include a lot of the official coins like silver eagles, maples, and private bars and rounds, it could be 5 billion ounces of silver out there. But this is what is identifiable. So it's only 2 to 1. Even at it's about 1 to 1. Even at 2 to 1, if there's 5 billion ounces, there's just not that much more silver. So what is going to destroy the paper silver market is the physical buyer. And logic suggests that in time, more and more people, as they're moving into the PSLV because they feel more confident that that's backed by real metal, more and more people are going to demand physical silver, and there's just not that much of it. So breaking the silver market is going to happen when investment demand overwhelms the market. And we're not even there yet. We're starting to. This is something that's going to take place over time, but each time it just gets worse. Because why? The energy situation is going to destroy the value of most stocks, bonds, and real estate. And so please consider subscribing to the SRS Rock Report. We put out a lot of analysis there, and I will be doing a new YouTube video probably in the next few weeks. I hope you all have a nice night. Thank you.